Good morning. Here is today's Korean economic news briefing. Today's economic landscape is heavily shadowed by the ongoing geopolitical tensions in the Middle East, with significant ripple effects across our domestic economy, from fiscal policy to financial markets and daily life. Vice Premier and Minister of Economy and Finance, Ji Yoon Chol, addressed the National Assembly yesterday, projecting that the Middle East conflict is likely to persist for at least another month. In response to this prolonged uncertainty, he stated that the government's supplementary budget, currently under review, has been formulated with a 3-month horizon to address the economic fallout. This proactive stance underscores the government's recognition of the serious and sustained economic challenges stemming from the conflict, particularly concerning energy security and supply chain disruptions. In a direct move to mitigate these risks, the Ministry of Economy and Finance has established an all-citizen supply chain bottleneck hotline. This hotline, which began operations yesterday, aims to receive real-time feedback and policy suggestions from the public regarding any import, production, or distribution bottlenecks caused by the Middle East situation. This initiative highlights the government's comprehensive approach, not only at the policy level but also through direct engagement with businesses and citizens, to safeguard our supply chains from external shocks. On a lighter note, Vice Premier Ji Yoon also took time to address concerns about a potential shortage of standard-issue trash bags, assuring the public that there is over 3 months' worth of inventory, and vowed to respond immediately to any fake news on the matter, emphasizing the need for accurate information amidst heightened public anxiety. The direct economic implications of the Middle East conflict are becoming increasingly clear, notably reflected in the 3 highs phenomenon: high oil prices, high interest rates, and a high exchange rate. West Texas Intermediate crude oil, for instance, surged to $114.60 per barrel as of April 2. This surge in oil prices is fueling inflationary pressures and raising concerns about our economic growth trajectory. Morgan Stanley has already revised down Korea's economic growth forecast for the year from 2.1% to 1.8%, while projecting consumer price inflation to spike to 2.8% in the second quarter. Against this backdrop, the Bank of Korea's Monetary Policy Committee is set to convene on April 10 for its final interest rate decision under Governor Lee Chong-yong's current term. While market consensus points to a likely freeze of the benchmark interest rate at 2.50% for now, primarily to observe the evolving situation of oil prices, inflation, and their impact on financial stability and the real economy, there's a growing expectation among experts for an interest rate hike later this year, possibly as early as July, should inflationary pressures persist or intensify. This potential move would align with the sentiments from some U.S. Federal Reserve officials, who are issuing an orange alert on inflation, prioritizing price stability over employment concerns, even as the U.S. job market shows signs of stagnation but remains near full employment. Meanwhile, the recent signal of fiscal expansion through the supplementary budget is also noted to be stimulating inflation expectations among households, indicating that public debt information is highly sensitive to price and interest rate outlooks. On the fiscal front, the 26 trillion won war supplementary budget is undergoing parliamentary review. Reports indicate that various standing committees have already proposed nearly 3 trillion won in zang-ae, or increases, for areas such as support for vulnerable groups and expansion of renewable energy initiatives. This underscores a political will to bolster social safety nets and strategic investments during this period of heightened uncertainty. Furthermore, as a tangible measure to conserve resources and enhance energy security, the Ministry of Climate and Energy has announced the implementation of a 5-day rotation system for public parking lots, effective today, April 8. This measure, which restricts vehicle entry based on license plate numbers, is part of a broader set of actions to respond to the resource security crisis. Shifting to the financial markets, the 3 highs have undoubtedly been the dominant variable impacting the Korean stock market. Despite a strong start to the day driven by robust first-quarter earnings from Samsung Electronics, which saw its stock price briefly return to the 200,000 won range, both the Kospi and Kosdaq indices experienced significant volatility. While foreign investors showed buying interest, profit-taking and lingering Middle East risks led to midday dips and ultimately a mixed close. The Kospi managed to close higher due to foreign buying, but the Kosdaq ended lower, highlighting the delicate balance between corporate performance and global uncertainties. In this turbulent environment, the Hanwha K Defense, Shipbuilding, and Nuclear Fund has seen its net asset value surpass 100 billion won in just 8 months since its launch. This remarkable growth reflects increasing investor demand for industries that offer relative resilience against geopolitical risks and potential for growth amid global conflicts. In the real estate sector, the impact of global events and domestic policies is stark. The proportion of rising transactions for Seoul apartments plummeted by 7.6 percentage points in March, hitting a 7-month low. This drop is largely attributed to an increase in distressed sales by multi-homeowners ahead of the expiry of the capital gains tax deferral on May 9, alongside a significant decline in buyer sentiment. This trend is exacerbating the real estate decoupling between Seoul and regional areas, with Seoul's apartment sales price index continuing to climb while provincial areas stagnate or even decline, raising concerns about widening asset disparities between the capital region and non-metropolitan areas. The outlook for apartment pre-sales in April has also dropped significantly, reaching its lowest level since January 2023, directly impacted by Middle East war concerns and stricter loan regulations. Moreover, the first-quarter apartment subscription competition rate in Seoul hit a 13-quarter low, primarily due to a lack of new supply in the traditionally high-demand Gangnam area. Turning to industry and trade, the U.S. is increasing pressure on South Korea regarding its investments in America, specifically mentioning semiconductors and generic drugs. The U.S. Trade Representative has raised concerns, linking them to increased imports of automobiles, steel, and aluminum, hinting at a potential review of existing trade agreements. This puts Korean companies, especially those in critical technology sectors, under closer scrutiny. While semiconductors have been a strong contributor to Korea's growth, with the Bank of Korea noting IT manufacturing contributing 0.6 percentage points to last year's growth, traditional sectors like machinery, steel, and home appliances are experiencing negative growth. This indicates a two-speed economy, where advanced tech leads while traditional industries lag. Meanwhile, globally, European automakers are accelerating their electric vehicle development and production, contrasting with their US and Japanese counterparts who are canceling EV projects. This divergence highlights how local market growth and strategic investments are shaping the global EV transition. The importance of modernizing trade agreements is also being discussed, with calls to update the Korea-Switzerland FTA to navigate the current global supply chain challenges exacerbated by tariff policies. Finally, in the realm of technology and the future economy, artificial intelligence continues to make headlines. The government is actively promoting smart safety technologies, leveraging AI to prevent industrial accidents, launching a challenge to find and spread best practices. OpenAI, the developer of ChatGPT, has proposed radical policies for a superintelligence era, including a robot tax, a 4-day workweek, and a universal public fund, to ensure the benefits of AI-driven economic growth are broadly shared. This signals a serious contemplation of the societal implications of advanced AI. Furthermore, agentic commerce, where AI agents select products and even make payments, is rapidly approaching reality, poised to reshape the payment market. Shinhan Card's collaboration with MasterCard on AI agent pilots is a testament to this trend, emphasizing the critical need for consumer trust in AI-driven financial transactions. Samsung SDS also secured a contract to build 175 AI agents for Worry Bank, showcasing the practical application of AI in the financial sector. For our viewers and investors, the overarching theme remains uncertainty, particularly from geopolitical events. The three highs of oil, interest rates, and exchange rates will continue to be critical factors shaping market sentiment and corporate profitability. While strong performers like Samsung Electronics offer some relief, the broader market remains volatile, influenced by profit-taking and external risks. Investors should consider a cautious approach, focusing on companies with solid fundamentals and resilience to external shocks. Sectors like defense and shipbuilding might see continued interest given the global climate. For general viewers, anticipating continued inflationary pressures and preparing for potential policy shifts, including interest rate adjustments and resource management initiatives, will be prudent. The emphasis on supply chain resilience and the rapid advancements in AI offer both challenges and opportunities that will define our economic trajectory in the coming years. That concludes today's economic news briefing. Thank you for joining us.